Good morning. Today is Thursday, March 26th, and welcome to the pre-market analysis for QOL Trading. If you're new to the channel, subscribe to the channel. Hit that thumbs up button, like this video, and we will get right into it. Also, if you go down into the description, you can find the link for the Discord, so you can join us for live trading from 9:30 a.m. to 11 a.m. Eastern Time. What do we got going on? We got unemployment. Came out about 210,000. We're getting some downward pressure this morning in the broader markets and the SPY and the Qs. So we'll take a look at those right now. Let's see what else we have on the docket for today. Natural gas short storage at 9:30. They stuck this in there, and this is new. President Trump is speaking at 3 o'clock today, so be prepared. I would definitely not have any swing positions overnight. Things are so volatile. We all know what's happening with the news. The second that any kind of news comes out, it could impact your position in 2 seconds. So be careful on your positions. I would say lower your lot size, get in and out of your trades quickly if you're a scalper. If you are a long-term trader, I would look for deep selling or point of entries for your longer-term portfolio. Anyways, again, not a financial advisor, so do your own homework here. This is all for educational purposes, of course. So let's get into the VIX. This is where we've been starting lately. I like to look at the VIX whenever there's some geopolitical stuff happening in the world. You want to pay attention to the VIX. It's the volatility index. So you can see right here, we had a gap down, which got filled yesterday. So I'm going to take this orange rectangular bar off the charts here. So I'm going to remove that. So you can see right here, this is a gap. Whenever we have a gap down or up, I put a line here. I label it gap down, and then I'll put an orange rectangle here to show me that there was a gap there. You can see it just got filled this morning, but now what had happened was now we created a gap up. So now what this tells me is that this gap will get filled at some point, maybe not today, maybe not tomorrow, but at some point will get filled. So what does that mean? That means that the VIX, if the VIX comes down here, fills this gap, that means it's an opposite effect for the equities. The equities will, if the VIX is falling, theoretically, the equities should be rising. So we are we are above the initial Iran spike that we had. So if we go back and we look when we initially had this news, it was right here about at the beginning of March, I think it was. Yeah, beginning of March when we came in. I could be wrong, but I think that's when we dropped our first bombs in Iran. So it was right here. We had that big spike. And then this was stuff that happened over the weekend, a week later, which created more of a spike. But you also see that gap that created right there, and it closed that gap right there. So there were gaps that were being created all over the place that closed. And you could see actually right up here, we had a gap down, and that closed at some point. I don't want to go far back. I don't want to spend too much time on the VIX today. However, we do have a gap up right now happening right now. This is a 4-hour chart we're looking at here. I like to break it down to a 15. I like 15 hones it a little bit right now. So the VIX is elevated right now. We are above the 20-day moving average here. I've been saying it all week. I like to see the VIX settle down, get below the 20, and get closer down to the 50, below the 20, below the $20 mark. Simmers things down right now. So there are talks right now of the ceasefire happening right now, but it's so volatile out there. If you've ever been following the Middle East, there's been ceasefires that have been broken nonstop over the course of the last 40, 50 years. So you can't really take it to the bank whenever they talk about a ceasefire because there's so many different facets moving out there. Anyways, let's get over to the ES. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button and like this video. So you can see yesterday, try getting above that 200-day. That's that line in the sand, all equities and futures and the SPY and the Qs. 200-day moving average could not get above it. Very spiky, very, very wicky yesterday. And you can see right now we're failing the close from yesterday. The 200-day, by the way, is sitting at 66, 65, 57. Could not get above that. Closed yesterday at 66.4150. Could not, and right now failing that in pre-market, and we are below a point of control from the 24th. Let me see right here. Let's get these pointing controls up here. So we had a pointing control that was closed on the 24th. And yeah, it was right here, and that closed. And let's see if we have any open pointing controls right now. Yeah, it actually did create a pointing control. So it did yesterday. This downward pressure right now is creating a pointing control from yesterday. So I'm going to label a pointing control up here as 325.26. Let me clean that up. Pointing control. And for those of you that are new, we leave these pointing controls on our charts until they get filled. And what I mean by filled is that they get hit, meaning that if the market, creates a line here, which this is a script that I have on my charts here, where it shows where the heavy volume is traded, and it plots a yellow line here. So what happens is it becomes a support and resistance line, meaning that if the market is trading below this yellow line, which is called the point of control level, it becomes a resistance level. So if the market doesn't come back up and hit that level, I leave it open. So now this is an open point of control, sitting at 66.50, 355, and you can see we're failing this old point of control. So I'm at 66.0571. So what I do is I leave these point of controls up here after they get filled, and I see how they respond. And then if they respond well, like this one is right now, I'll just mark it as filled. So I leave that as a level now, and I could see that if the market trades back up into that level, that I will use that as a level while I'm trading to use it for a support and resistance level. So today on the downside here, I see us right now failing, pulling down to the 65.37.34, which is a lower end regressional trend line that I have here since the January 27th of this year. If we lose that, we come into the 65.23, which is the high of August of 2025. If we lose that level, then we have a 64.7810 level that I have there. If we lose that level, we come down. We could come down to the 63.7175, which is September of 2025 low. And if you lose that, I don't have anything until February of last year's high of 61.6650. So there could be some significant downside if we lose these two levels here. This last line in the sand here is 64.7810. So keep an eye on those levels right there. Again, upside, not thinking long until you can regain this 200-day moving average. 66.6557 is that line in the sand. You do have to be careful. Trump is speaking today at 3 o'clock, so that's something you have to watch. I would not carry any positions in overnight. However, you have to pay attention to these speed zones. Whenever you have a directional move one way or the other, it creates a speed zone. So you can see this big spike up here, and this came on at 6 o'clock on Monday morning, when they had a ceasefire for 5 days when Trump announced it. So a straight up move creates a speed zone on the way down. So if you lose this August high of 649.48, by the way, we're on the SPY right now. If we lose the 649.48 level, you're going to give back this entire speed zone move and come down to the 644.72. It looks like it's going to test that right now. If you lose that 644.72, looks like it's inevitable. Below that, 643.33 is September 5th low from last year. Below that, you have a high of 639.85 from July of 2025. And below that, you have 634.92, which is September's monthly low from last year. Below that, you got a small little level there at 631.30, but I would say a better level to use is at 619.29, which is August of 2025's low. All right, so let's get into the NASDAQ. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and go down to the description, join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. Also, don't be afraid to share the video. And on top of that, if you want me to cover anything else that I'm not covering, please drop a comment down below. I'll be glad to cover it. However, I will not cover any penny stocks. Those of you that come to this channel every day, you see that I am a rinse and repeat guy. And if you want to be a trader, that's what you need to do. You have to have a few staples in your arsenal, and you have to go over your broader markets. You have to go over your levels, and that's what trading is about. And you have to be rinse and repeat. You have to become a robot. Now, does that mean that you have to buy an AI tool and become autonomous? Absolutely not. I don't think autonomous is there yet. However, I'm sure there's plenty of people out there that have algorithms and they have their own trading platform. I just don't see it yet. Now, does that mean that it can't help you? Of course it can help you, right? But you still have to monitor your trades because there's a lot of things that set off these algorithms that you have no control over, right? NASDAQ, same thing on the NASDAQ. I have to watch out for this 24,041 and 75. It is July of 2025's high. If you lose that, you come down to this 23,904.50, which is November 20, which is a November low I have there, and I've got a dotted line for some reason, so I'd have to go back and take a look why I have that, but that seems to be a level right there to pay attention to. If you lose that, you've got a monthly low of this month at 23,768.27. If you lose that, you come into this high. What is that? That is a I think it's a monthly high from August of last year, 23,616.25. Below that, 23,505, which is a low from September of 2025. And then I think this line in the sand here, you have to hold this 23,320.75. If you lose that, I don't have anything until 23,112, and then below that is your last savior here, 23,025.25, which is September low and a June of 2025 high. So this is a pretty good confluence level here that you want to pay attention to. And that, but if you do lose that, you know, you don't have anything for a few hundred points lower down here at 22,775, which is an August low of last year. That's pretty much it for the NASDAQ. I actually, you know what, before we leave the NASDAQ, let's look at our point of controls. We did create an open point of control as well. I want to plot those. I'll probably go back to the SPY also. I think there's going to be a lot of open point of controls for this downward pressure from yesterday. Point of control. Easy to plot here. So we have an open point of control. You can see why is it point of control? Because it did not come back up after, this is regular market hours during this black area, did not come back up and hit it, right? So it's got to hit it. So we have an open point of control at 24,437.26. So that's positive, right? I like having point of controls above us. That means that the market gravitates back to those levels, right? So let's get over there. Let's plop. Let's go over here on the SPY, see if we have one for the SPY. So the SPY does not have an open point of control. Okay, why is that different? So here's your point of control level during the market, right? It plots where the heavy volume is traded, and now after is this gray area here. This is after market. Well, what happened after market? It came back up and it touched that point of control level. So I do not leave that as an open level, right? So it's a closed level. Now, some people, you can have your own strategies and you can plot that and say, oh, well, that was a pretty good level here of resistance. So if the market plops back up, you know, if the market, shoots back up there, that could be a level of resistance. So if I'm trading the SPY, and I'm long, I want to get out of that trade. Or if I'm not in a position, I may want to take a short. But right now, you can see it's respecting this 200-day moving average on pretty much all stocks right now. So you got to watch that level. Let's take a look at the Qs, and then we'll get into Tesla, and then we will call it a day. Same thing, below the 200-day moving average, didn't even come close to the 200-day moving average yesterday on the NASDAQ, or on the Qs rather. However, we do have an open point of control that it created yesterday, so I will make another one here from 325.6. Point of control. Easy to plot that. Boom. Done. So that's there from yesterday, 589.26. We are getting downward pressure right now. It is bouncing off of this 580.74, which is November's monthly low. So we'll see how that responds. So when the market opens up, if you lose that monthly low, 574.63 is the next level I have. It's a July of 2025 high. You should get some bounce off of that. But if you can see right here, this 580.74, if you lose that, you're going to come down to this 574.63 pretty quickly. Why do I say that? Here's your speed zone, right? What do we say about the speed zones? When you get one directional straight up or straight down, it creates a speed zone on the way back, right? So here's your line in the sand. It's going to play games here for a minute, but if you lose it hard and you get a little push down here, I wouldn't mind taking a short and your stop just above it in case you're wrong, right? Because everything is a probability. Nothing is 100%. So would not be a bad trade. Or if you get a pop up here into this 583.32, maybe a short into here, right, and a stop above there, right? Maybe if you do get a pop here, take your short here, and then I would, maybe sit with your seatbelt on all day and then just try to ride it all the way back down here, right? So a lot of ways to play this trade if you're trading the Qs, but again, there's so much media out there right now that you have one tweet that comes out, it could change this market, the structure of this market in 2 seconds, right? Look at what it did here at 6 o'clock on Monday morning. Boom. It looked like the market was, before you're looking at this, if you were just looking at this in the morning, this is what you're looking at. Like, oh, wow, we're going to get smoked today. We're going to get smoked today. And then boom, 6 o'clock in the morning comes and boom, right? So you always have to be careful. Nothing is a sure thing. Protect yourself, proper lot size, right? So anyways, that's it for the Qs. Let's get over to Tesla. Again, if you're new to the channel, subscribe to the channel. Like this video, hit that thumbs up button, go down to the description, and join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern Time. Also, don't be shy. Share this video with people as we try to build our community. Tesla, nice point of control level that we had up here at 389.90. That's created from yesterday. Let's go to our point of control charts here. So I made a nice point of control chart here with all of our open point of controls. I have some filled. I leave those in there. Like I said, some of them, I'll leave them in there to see how they respond. But this is a nice cleaner chart here showing us what we have open here. We have an open point of control at 334.07. So this is more of a long-term vision here on what we have. We filled that September 11th point of control on the 20th, I believe it was. And at 365.83, right? And we bounced off of that level here. And then we had that big spike on Monday over there, right? So what we have above us, though, so now we have an open point of control at 388.90. We still have that point of control from the 18th at 397.89. Did not fill yesterday, tried to, but it got rejected by the 20-day moving average, right? Above that, we have a 455.12 point of control from January 5th of this year. And then above that, we have the 478.39 from December 26th of last year. So I think what would make things nice and clean, a nice clean chart, you got to come back down here. You got to fill this 334.07 point of control. Then we could start heading higher and then start knocking out these point of controls above us. That being said, let's get down into the nitty gritty and look at our levels here. Here's the noise for you, people. Sorry about that. Downward pressure today, I would say, let's take a look at this. Cleans this up just a little bit for us, okay? So here's a regressional trend line here. I drew this one here from the 25th. This is the high of all-time highs, rather, from last year. So it's a midline here. So it's going to be a level here. It's going to play some games on us here. So I would use it. You could use this as a resistance level here. This 380.78, and then come on down here. But now this bigger, larger white line here. This is a midline regressional trend line that I have here from June 16th of 2019. Okay, so we're looking at a fairly long, almost a 7-year regressional trend line. Okay, so the longer you go on a trend line, that's going to hold more it's going to hold more leverage than a shorter term one. However, they both have equal value. Why? Because this is coming off the high, this midline right here. Okay, so that has some value. And this one is you're 7 years into this one, almost 7 years into this one. So you've got a lot of data into this line. Okay, so you could see how it responded here. As we go further back, you could see boom, 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 it's responding well, right? Let's see what it looks like back here. You can see at these levels, it's responding, right? Let's see what else we got back there. Nothing back there, right? Nope. So it's all happening right now. So you got to watch these levels. So if you do get some sell-off here, you could get some reaction here of a bounce, right? But if you lose that now, so now if you lose that level, now you have these. This is something different that I'm playing around with here. I've got the bottom of a wick. It's a 373.32. So let me show you what I'm talking about. So this is a bottom of a wick that happened. Where did it happen? It happened right here. Look at these flash wicks that we're getting here. Got a flash wick right here, flash wick right here. This happened on the 23rd. So I've been paying attention to these flash wicks because what happens is they seem to come back and retrace themselves, right? But they don't do it right away. So I've just been marking them on my charts and just kind of playing around with it. And that's how I start to create data and different trade plans by noticing different nuances and plotting them. And I don't trade off them yet. I start to gather data, right? And that's how you evolve as a trader. what I trade right now versus what I started trading, 25 years ago is a joke. It's completely different. It's evolved. And things that I show you on this channel, I try to show you basic things, but then at some point you need to evolve and become your own trader. When I tell people to come to the Discord channel, I don't want you to come to the Discord channel and wait on your hands, wait for me to call out trades. I want to show you what I look at, and then you have to become your own trader. And I hate to repeat sayings, but this is a great saying. Give a man a fish he eats for a day, and teach him how to fish he eats for a lifetime, right? And it's just a perfect saying, right? And it's perfect for trading, right? So you can see, getting back to Tesla right now, you can see we're down, having this downward pressure again. Here are your spikes, that your big spike ups that you got to watch out for right now, that if you lose these levels. So this, I would say, line in the sand today, I'm going to say this 379.89 level. It's Friday's high. Yeah, if you lose that level, you're going to come back down here to test this 378.11 level. And if you lose that, I think you're going to come back down here and you could test this 367.71 level. So you got to be careful of that, because then, then you're going to start approaching this major level here. If you lose that, if you did get that sell off and you lose this fill point of control here, again, here's your speed zone here. And if you lose that level here, I don't have anything till you get down here. You could use this regressional trend line here from the high at 357.98. And then your line in the sand down here is 355.87, right? And this is a weekly high from September of last year. That's if you can continue to get this downside here, right? And everything right now from yesterday, we got up here. I actually sold this up here on the spike yesterday, the 20-day moving average. It was a good sell. It was a very, it was a big extended move in the morning. And I sold short there, and I said I'm going to have a stop above it if this candle closes above this 20-day moving average. I was going to get out, right? But it rejected it immediately, right? You could just see if we just fan out here, what's happening here to the market here. It's just straight downhill, and you could see we're just stepping down right now, right? So you got to see what, you have to fan out and look larger scale here, right? So you could see we're still on a down, even though Tesla had some good spikes this week, we're still overall trending down right now. So don't be misled by this spikes right now. So trade your levels, right? So watch your levels today. I would like a spike into yesterday's close, right? So if we get a pop into yesterday's close, or even this low, this weekly low of 385.39, you could look to take a short up here with your stop above yesterday's close. That could be a good thesis for this morning, right? Or if you just absolutely just lose this 379.89 level, take your short right here with your stop maybe above this regressional trend line, right? So there's a bunch of ways to trade this morning. Downward pressure looks like it's here right now. However, you have to be careful with this, big sell-off in the pre-market, post-market and the pre-market, because if you look down here, it's not a lot of volume. Even though we are going down here, and you can look at these candles and like, wow, look at the size of this candle. Well, this candle only represents 15,000 shares, right? And if I go over here and I look at this candle, it represents 1.2 million shares, right? And this candle is 3 times the size. So don't pay attention to the size of the candle. Pay attention down here to your volume, right? The volume is the key to everything, right? Learn how to read your price action, right? So now let's go over to what we're going to do for today. I'm going to use tomorrow's expiration date. There is no expiration date for today. I'm going to use the 385 calls. They close at 565. So I anticipate, because where are we right now? We're about $5 lower. This will probably open up in the $3 range. So this will be a sweet spot for us. And then I'm going to have the 380 puts, and this will probably open up in the high fours, because we're $5 lower, right? So if you buy a put, you want the market to go down. If you buy a call, you want the market to go up, right? So if the market's going down and you buy a call, this premium price is going to go lower. If you buy a put and the market goes up, this premium price is going to go lower, right? So if you think the market's going down, you buy a put, this premium price will go up. If you think the market's going up, you buy a call, and this premium price will go up. Okay, so that's what we're going to use for today. If we take a look at what we do when we go in the trading room, we start out with the 5-minute opening range trade. Okay, so we'll go over to yesterday, and here's the 5-minute opening range trade. So aside from that morning spike, the rest of the day was down, and then you finally got your break of the day at about 10:50. So you had your range yesterday. 389, just call it 389 to 394. And then you got probably a $2 spike there. So you could have, I didn't take that call. It was too extended for me. I waited for this and I took a put, and so I bought a put here on the $20, the 20-day moving average level. And I got out of it. I didn't write it down too far. However, it was a decent trade. But if you went back to this 5-minute opening range trade, you finally got your break here at about 1050, right? So once you broke your the low of the day, which is 380, I call it 389, and you could have, and if you wrote it out for the rest of the day, you could have gotten yourself about $4 out of that move. So about $2.50 out of your premium, right? So wherever you bought it here, for every one lot, that was $250. And I always refer to a one lot, right? So you just do your increments from there. A one lot is $250, a two lot is $500, etc., right? And you can figure it out from there. But anyways, come in, go down below and click on the link for the Discord, and so come and join us for the live trading. We'll go over it more detail from 9:30 a.m. to 11 a.m. Eastern time. If I don't see you in there, I will see everybody tomorrow morning. Remember, if you're new to the channel, subscribe to the channel and hit that thumbs up button, like this video.